Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be on again, Jim.
Lobo, you've noticed a really interesting relationship between the price of gold and what the New York Stock Exchange is doing. Can you tell us about it?
Yeah, it's nothing too earth-shaking in concept, right? The stocks are generally regarded as risk assets. Gold is generally regarded, if it's regarded at all, as a safe haven asset, and you would expect it to move inversely. But that's not often the case. I would even say over the decades past, it's usually not been the case, because most people, most of the time, don't think of gold as a safe haven asset. It's just another commodity. It's metal you use for making jewelry, certain high-tech applications. You know, it's like pork bellies or coffee. And so it's just a good where funds can flow. And we have often seen, over the past decade, big picture, money responding to the dollar, interest rates, and moving in and out of these assets. And sometimes, gold and the market moving together, which seems a little odd, but that's just the way it's been. And so what I'm saying is new. It's not the inverse relationship, but the strength and the frequency of the inverse relationship. It's more like gold's gone back to being what it should be, or more people buying and selling on the market are treating gold not just like pork bellies, but as a safe haven asset. And so the numbers that we're seeing are inverse in a much bigger proportion. I don't have a stat I can throw at you, and 70% of the time the market does this, gold does that. And I should research that, but I'm just telling you as an observer, I'm looking at it this year, and we've seen it this week where the Dow drops 300 points, gold pops. Nothing else happens. There's nothing else in the news that gives you a reason for gold to move. It's clearly a response to the market movement. I think this is very significant. Again, that inverse relationship isn't of itself new, but the strength of it and the frequency of it tells me a lot about the investor psychology. And it tells me, one, that a lot of mainstream investors, not just gold bugs out there, the long-suffering gold bug waiting for gold to hit new all-time highs, but mainstream investors are well aware of gold's role as a safe haven asset. And in the post-2008 world, this makes perfect sense to me. A lot of these guys who believe the Warren Buffett gold has no useful purpose meme or the barbarous relic meme, they missed the boat when nothing else was moving after the crash of 2008 but gold and silver. And the gold and silver stocks that did so well in 2009, 2010, while the markets took their time coming back, all the financial professionals, or most of them in the markets today, have very painful memories of that event, and it's recent. And so I think this makes sense. I think the jittery feeling on Wall Street, given how long the bull there has run, makes people trigger happy. It makes them, sell right away when something doesn't seem to be going well. And the gold market is so small that if a lot of these people decide to put money into gold when the markets really do tank, and they will, sooner or later they will, recessions happen. It's always a question of when, not if. An earnings recession may indeed be in the cards in the near term. So I'm very encouraged by the strength of this relationship is what I'm saying. It's not new, but the strength of it and just the frequency with which we see it happening this year. Bad news on the markets, people go into gold. I think that's extremely bullish for our long-suffering gold bug friends.
Does that apply to other precious metals like platinum?
Well, that's actually a very interesting question. It does and it doesn't. I've been looking at this. It does for silver, for sure. Where gold goes, silver follows, usually with greater volatility, which is bad on the downside, but great on the upside. We see gold go up 0.5% or 1% in a day, and silver will go up 2, 3, 4, 5% that same day. If you look at the charts, you'll see the lines for platinum and palladium wiggle in the same way. Like gold pops that day, and platinum and palladium will wiggle also upwards. Or gold drops that day, and usually you'll see platinum and palladium drop as well. So clearly, to some degree, they're acting as precious metals and responding to the same forces. But the movements are often very different in magnitude. And even if they wiggle or, on the same day, there's some fluctuation in the same direction, the overall trends can be very different. As we saw in 2018, palladium had a fantastic year as an industrial metal. Gold wasn't really going anywhere, too exciting last year. And whereas gold has really broken out in 2019 and, 5-6 year, levels, palladium is sort of trading sideways at the high end of its recent range. So bigger picture, I think the evidence is quite strong that platinum and palladium are still largely regarded as industrial metals. And you should not count on a precious metals, a further major leg up in precious metals doing a lot for those metals. And my way of looking at that is the average person can't really tell one silvery looking metal for another. But silver is not cheaper than platinum and palladium. So nobody's going to try to trick you into buying silver by giving you a platinum coin instead. Whereas if you buy a platinum coin, how do you know that's really platinum and not any other silvery metal? Unless you're an expert, you probably don't know. And again, the supply and demand dynamics are clearly, what's in the driver's seat here. That's why palladium did so well, when other precious metals weren't last year. And that's why platinum has done so poorly. Despite your platinum Visa card being supposedly a better card than your gold card, platinum's done so poorly lately because of its economic role declining. So I'm not saying they won't ever respond as precious metals. I'm just saying it's very dangerous to make the assumption that, if we're in for a precious metals rally, it's going to carry platinum and palladium much higher with them, let alone rhodium or whatever. These are industrial metals.
Some people have mentioned that gold should be much more popular than it is right now, considering how much it's gained in price. Is there still this attitude that, like you're saying, the Warren Buffetts were calling gold nothing but a shiny rock? Is that attitude still out there?
I don't think so, actually. I again, with where we started this conversation, I'm very encouraged to see mainstream investors going into gold on days when it's risk off on the broader markets. That tells me that the broader investor population out there is much more aware of gold than they used to be. So it can't just be the Warren Buffett attitude. Clearly, some people have that attitude, but it's a smaller proportion than it used to be. And even more on that, you look at the talking heads on financial media, the Yahoo Finance guys who love nothing more than FANG stocks to talk about, they talk about gold every day now. And sometimes their technical guy even charts silver, which just blows my mind. They spend all day talking about WeWork or the latest IPO from Silicon Valley or whatever. And yet the precious metals have become an important enough part of the broader markets that nobody can afford to ignore them anymore. So I don't think it's that. What I do think, though, is part of what's going on here is the 2016 head fake. Right? We had a terrific rally in precious metals in the first half of 2016, and boy, did that just roll over and go right back down again. Not to 2015 lows, but to very disappointing lows. I think a lot of people are sort of once bitten, twice shy, in particular about the equities. Right? Gold and silver are up, and they're staying up largely. Not rolling over. It's just a consolidation period here, not like 2016. But the equities have overall underperformed. They haven't seen the excitement that we saw in 2016. So I think we need to get over the unhappy aura of, maybe this will just be another head fake like 2016. And if prices just remain flat the way they are to the end of the year, that will clearly be very different from 2016. But I think there's another impulse here or another potential logjam breaker, and that is earnings season is coming up for the miners. And that's not going to be great for the industrial metal miners. But we had an entire quarter, really the breakout happened in June. So we've had an entire quarter of much higher precious metals prices. And most companies don't update their guidance on a quarter by quarter basis. So I think a lot of these companies, if they just, all they had to do was not fail in a big way. All they had to do was not be incredibly stupid and waste the opportunity. And most of these companies should beat expectations. And if it's, one and two companies have a great quarter, that's one thing. But if on average a whole sector beats expectations, I think that gets a lot of attention, not just within the sector, the people, once bitten, twice shy, but in broader markets. And in particular, I think the algos are programmed to notice this sort of thing. If you've got machines that are seeking alpha and one sector is shining when others are lackluster, and a lot of the outlook I've seen for mainstream equities is for the earnings recession to hit before the real recession hits the U.S. So I'm not promising this. I'm just saying the stage is set where we could have a really attention-getting, outstanding Q3 in precious metals at a time where there's not a whole lot else to be very excited about. So that could do wonders, and that could really change the psychology of the market, which I do think is still hesitant after all the volatility and all the pain we've suffered since stocks started sliding in 2012. And gold, sorry.
We'll have more with Lobo Tiggre right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, we haven't talked a lot about the cannabis space for quite some time. Is there a lot of action in there, or is it still contracting?
Well, as you say, we haven't talked about it a lot, and I have to, full disclosure here, say I have no investments in this area. I have no intention at present to move into this area at all, so I have not researched it deeply, and maybe we should just stop right there. But there's a reason for that, and one reason is that I know that I'm not an expert in that. If somebody could persuade me that some speculation in this area was really a no-brainer, highly asymmetrical, huge reward to the risk, and I trusted the source and so on, I might be persuaded to take a go there. But I recognize that I'm not an expert in that, and I think it's a mistake to just go, chasing alpha, right? Whatever the market darling is at the moment, go piling in, because you may be the greater fool, right? If you can objectively see that you're buying low with the intention of selling high, that's good. If you're just buying because it's hot and you're hoping to sell higher, you don't know whether you're the greater fool who comes along and buys high. I don't want to be that greater fool. But there's more than that we can say, and that is, I just look at the industry and, pot, marijuana, it's called weed for a reason. It grows everywhere. So clearly legalizing it is a huge change, and there's markets are going to change, and people are going to make money in this space. But do I know which people? That's a difficult call to make, and certainly on the growing front, which is really where this started. And there's talk about consumables and other things now, but everybody got all excited about the grow space initially, and that just struck me as highly hazardous. Why would somebody go to a government store and pay whatever premium for pot in the store when they can just grow it in a window box? I just have a hard time seeing that. The quality argument, that just flies in the face of homegrown, right? People always think the tomatoes they grow in their garden are better than the ones in the store. So I'm having a hard time seeing the grow business as a great sector to invest in. And as far as the other ones, which oil is going to be the most popular food additive or whatever, I have no personal confidence in that area. I don't have a basis for judgment other than just trusting some other person to tell me, oh, this is a hot thing. And I guess I'm just not a very trusting person. I've grown so skeptical over my years in the market that if I don't have my own independent sense of yes, this is true, or yes, I understand why this is the case, and this presents me with an attractive risk to reward proposition, I just don't want to invest. So I'm not poo-pooing it. I'm not telling your audience there can't be any money to be made there. I'm just saying I'm not the guy who's going to figure that out, or at least I don't feel that that's me right now.
And isn't it a lot when you have a brand new industry trying to figure out who the winners are going to be? If you look at when the automobile was first invented, there were thousands of car companies, and then finally over the decades they shook down to a handful, and then only some of them were profitable. So is that
Absolutely.
what's happening with
That is
marijuana?
an excellent point, Jim, and it's really worth remembering. A more recent example would be the tech sector, right? If people look at a chart of, say, Amazon or Apple or Microsoft, these are 100-baggers, not just 10-baggers. These are 100-baggers or more. I mean, just amazing. If you could have got in early at pennies to these stocks that go to hundreds of dollars, that would be life-changing over those decades. Now, mind you, that didn't happen overnight or even in a year. Those are decades-long gains. But still, some fantastic wins out of that. But how many thousands of dot-com companies went bust in the dot-com crash? And who could have known? There's a famous picture of the founding team of Microsoft, and they look sort of like a bunch of 80s style pseudo hippies. All that big hair and all this stuff. Right? I mean, it's not exactly a team that inspires confidence just to look at the picture. Who would have known back then which of these companies would be the one, the handful that are the market darlings today? I just don't think anybody, not Warren Buffett, nobody could have predicted that. And so, yeah, sure, it's a great thing to look at those charts and look at the potential, but you have to understand the risk there. And when these companies, these pot companies sprouted like weeds all over the place, it gets back to my point. How do I know which one of these is going to be the Amazon of pot stocks or the Amazon of CBD? One of them might be, and wonderful for the people who happen to get that one. But frankly, I'd rather take my chance on a roulette wheel.
We'll have more with Lobo Tiggre right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, the IMF said the trade war between the U.S. and China is dragging down the entire world economy. Why is it doing that? The president seems to think it's just the U.S. versus China.
Well, there could actually be a very long conversation, Jim. Let's just say there are knock-on effects, right? Supply chains are global these days, so a tiff between two players is never limited to just those two players. So that's just a very direct, linear causal impact on all the different players affected by global market supply chains, logistics chains. Everybody's affected by this. But that aside, I think that's actually the smaller part. The actual harm done to XYZ business that no longer has as many ships to fill or no longer supplies as many parts to a factory in China or whatever the case may be for the direct impacts. That's important. I'm not dismissing it, but I'm saying I think a much bigger factor is just the uncertainty. Nobody knows what's going to happen next. I mean, just this week, we saw the Dow drop 300 points in one day because the U.S. and China are going to have a low-level meeting. And today, the Dow's up 200%, and the talking heads of financial media are saying it's the same reason. It's the U.S. and China are going to have a low-level meeting, and there's optimism today when there was pessimism yesterday. But nobody knows what's going to happen. And whether you love Trump or hate him, I think one thing we can all agree on is he's pretty unpredictable. And he likes to shoot from the hip. He likes to rock the boat, shake things up, and see if he can change things. If you're an optimist, if you're pro-Trump, you think this is all part of the art of the deal, and this is good. It's going to change things. I hope you're right. I'm a little more skeptical just of all politicians in general. But whether we agree on that or not, the point though is that shaking things up, doing the unexpected, that upsets markets. Markets like certainty. People, if you're a miner with a 30-year business plan, you don't want the rules of the game changing. You don't want all your assumptions and your models being thrown out the window because suddenly there's a new tariff in the way, or some other regulatory or judicial response to tit-for-tat actions on the trade front. All of this is possible. We're seeing this. We see, the U.S. and China arresting each other's nationals, supposedly on completely unrelated things. Or now the U.S. is banning investment on certain Chinese companies. It has nothing to do with the trade war, they say. It's just pure coincidence that our concerns about the security implications of these investing in these companies happens to come a couple days before a trade meeting, right? So in my view, the big thing here is the uncertainty. And markets hate uncertainty. Businesses hate uncertainty. Nobody can plan. If you have inflation or deflation or whatever, it's fine as long as it's a steady rate, as long as you can predict and you can say, well, here's the rate I need to make my business work. When everything's changing, you can't do that. And that's bad for business. That's bad for the economy. I'm completely unsurprised by this turn of events.
Just going back to the marijuana space briefly, I just looked at a brand new Financial Post article that said the headline was "Feeling Burned, the first year of legal cannabis has been a complete disaster for investors, with the overall investor return a negative 57% on their investment." So
very good. Well, so actually, let me come back to that, because I was thinking on the break about this, and I'm not going to be the Johnny-come-lately, and I don't want to play the greater fool. And your stat that you just cited there tells me I made the right call. But my friend Doug Casey, he made a lot of money on pot stocks. How did he do that? Was he the genius that saw which one is going to be the next Amazon of pot stocks? As much as I love Doug, no, that's not how he made money. He got in early. When this first started happening, he saw where things were headed. He correctly predicted the legalization trend. He got in on some private companies that, the seed round or near seed round, penny type investments with warrants and things. And then when those things went public and when the mania started, it didn't matter which one was going to be the Amazon or not. All of the companies he invested in may actually go nowhere eventually. But once the mania started, he was able to get out as an early investor and make good money. So if you're a contrarian and you're forward thinking and you can see a trend coming, there are opportunities to make good money. I would leave it at that. But I'm not going to come along later and try to jump on a bandwagon for something that could be just flavor of the day.
Is anything going on with uranium?
Yes and no. We're still in that holding pattern, but we should have some clarity on the uranium space soon. We talked about this last time, October 14th. It's right around the corner. Just a couple days from now. I'm not sure when this show is airing. It may be happening as people hear this, but October 14th is the day that the working group that Trump established to look into the U.S. uranium question should report. Now, it may not. There have been departures from the U.S. administration that may cause some delays there, and the working group doesn't have the same legal obligation to report that the Section 232 process did. So we could see some delays. But even if they are, I don't think it'll be much. Whether there's delays or not, I do think we see an outcome soon. And I can't prove this. This isn't a trend. This is just my take. But my take is that Trump would not have created this group if he didn't want to do something. Like if his answer was, nah, I'm not persuaded there's a security or a real problem here, we'll just let the markets handle this. He would have done that in July. calling for this group would be a huge waste of time and money if the group wasn't going to come up with some sort of recommendation to try to help the U.S. industry. So my personal take is I do think the U.S. producers are going to get a little bit of a boost whenever the decision happens. But even if not, just the end of this process will remove uncertainty. We were just talking about uncertainty. I do believe that a lot of the buyers have been off the market waiting for this to come to an end. And I do think we will see them coming back to the table. And I don't think any miners are going to sell to them anywhere current spot prices. So however the Section 232 or the post-232 working group process ends, whatever the recommendations are, I think just the end of the process is bullish. So is that happening now? Maybe, depending on when this show airs, maybe it is. But today I can't say, oh, uranium's up and it's hopping again, things are done. I think there's a potential near-term catalyst. However that works out, I remain extremely bullish on uranium over the next year or two, because the prices now are not enough to get the stuff out of the ground, and it cannot be substituted in less than decades. I mean, the users of this product have no recourse but to get more of it, and it can't be got at today's prices.
Is it not the case that more atomic reactors are coming online either now or in the near future?
Well, this is one of those things where there's lies, damn lies, and statisticians. You know, I've seen people point to a report saying, "Oh, that's not true. We're decreasing the number of reactors in the world." So it depends, of course, on the definition, how you look at it. If you look at the most strictest definition, number of new reactors being built versus reactors slated for decommissioning. Already, the decision has been made and these reactors are slated to come offline. Then, in fact, the number is decreasing. There would be, by that standard, there would be fewer nuclear power plants in the world in 5 years than there are now. But that's an unrealistic standard. It's not just strict, it's unrealistic. We already know that France, for example, is looking at extending the mine life of some of their 40-year-old plants that have had no accidents and no troubles, because they need the power. It's one thing that for politically popular reasons to say, oh, we're going to phase out nuclear power. It's another thing to actually turn off the lights when you need them on. So we're already having governments reconsider these shutdowns. But on top of that, a lot of the newer plants are more powerful. If you look at the new plants being built in China, which is one of the countries that's building most of the new plants, they're not just replacing the older ones with new ones of the same design. The new ones are much more powerful. Some of them have twice the power output of the previous one. So if you just count the number of plants that are being built versus taken offline, the number of plants is decreasing. If you count the power output and therefore the consumption of fuel, uranium required, it's a different story. Plus, I think that whole strict definition is too much. It's okay, there's only so many that are being actually built right now, but on top of that, there's a number that have already been planned. They're approved. These are not just projects that might happen. These are projects that are planned and going forward. So if you look at that number, then the under construction plus planned is greater than the number being decommissioned. So already we're in the black. The number is increasing. And then if you add to that the ones that are being considered, like they're not yet in the planning stage, they're not yet green lighted and moving forward, it's just proposals that are on the table in China, Brazil, Russia, other places, mostly the BRICS, but not exclusively. You add that number in, and it's huge. We're actually looking at something like an 80% increase in the world's nuclear power plant fleet within the next 15 years. That's a large number. Now, of course, a lot of those proposals won't go through. So I'm saying that what the critics are saying when they cite the strict number is technically true, but I think grossly misleading. And I think what the optimists are saying when they point at the proposed number, it's potentially misleading. That's a very optimistic number. We know these plants have opposition, and a lot of the proposed plants are not going to be built. But if you look at the middle of the road, you look at the ones that are being built, and you look at the ones that are in the works, and we are, in fact, not only adding numbers, but we're adding significantly more power output there. So that's bullish for uranium.
Lobo, anything else we should be keeping an eye on right now?
I think the one thing to really, what I'm doing with my own money, where I'm focused right now, is I see the fluctuations we're seeing, sideways trading in the precious metals market as a very normal, healthy, even correction and consolidation period. Gold had a fantastic run up in the third quarter of this year, and if it kept going nuts like that would actually worry me. It would be too much too quick. The fundamentals wouldn't justify it, doubling overnight or not overnight, but in a year. I mean, that would be a very sharp peak that would make me very nervous and looking for a much bigger correction. But for it to build up, plateau, work its way through sideways, have the weaker hands exit, or the ones that are in it for the short term exit, turn the gold and silver over to stronger hands, I think that's very constructive. And so what I'm doing right now, and people who subscribe to the Independent Speculator can see specifically what's on my shopping list, is I'm looking for, hopefully, the nervous Nellies to give me some excellent entry points to some of the stocks that I missed earlier this year.
Lobo, thank you so much for being on the show.
Thank you, Jim. Have a great one.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.